Johnny is looking to buy a house. However, he doesn't have enough cash on hand to buy this big house, so he decides to look to borrow money from a mortgage company. These are companies that lend money to borrowers like Johnny in the form of mortgages, with money earned from interest on other loans from other borrowers and money interest earned from financial investors such as large banks. There are many large mortgage companies to choose from, like Bank of America, NationStar, and Wells Fargo. He doesn't have to worry about getting rejected from other companies because he has decent credit score, and the Equal Credit Opportunity Act prohibits any companies from discriminating based on race, sex, gender, or religion. Johnny decides to go with Lehman Brothers for his main mortgage company. When Johnny pays for his house, he only pays for a portion of the house called a down payment, borrowing the rest of the money from the mortgage company. Then each month he pays the mortgage company back with an added interest. It's 2008, and Johnny's been living in his $1.2 million home for a while now. However, a couple years after buying the home, he loses his job and his wife leaves him, so he goes to work at Walmart. Johnny is now what we call a subprime borrower because of his lowered credit score from his failure to pay back on his bills. He fails to pay for his mortgage because his house is too expensive for him, and because of thousands of people like Johnny who default on their loans, the housing bubble explodes and it results in the stock market crash of 2008 to 2009. Ultimately, Johnny's favorite company, Lehman Brothers, collapses and many other banks lose tons of money because of their huge investments in the housing market. Subprime loans, which are paid to people like Johnny, aren't paid back, and the banks that invested in these loans collapse because they don't have the liquidity to compensate for the defaults on these subprime loans. Today, Johnny's getting his life together, but now he knows to purchase a smaller house and the mortgage companies to do the same, so as to avoid another one of these events.